Thank you so much. And I will start with dear friends, because the ones who are here with us while it's raining after the lunch really deserved a big applause. So one applause for you, please. All of you who are here. Thank you so much. For the explanation, this panel is going to have actually two parts. As you may see, we have two gentlemen who are going to join us a bit later, because at the beginning we're going to speak about the real estate, about the resilient real estates, and within the second part, we'll dive deep into the infrastructure and explore that subject with the head of EBRD, Mr. Zakaria, and with the Minister of Montenegro. However, I'm very happy to be with Sasha and Alexandre. Sasha is the nickname of Aleksandra, that we avoid the miscommunication on the stage. I'm very happy to have you here. And as it has been announced, Sasha is the managing partner, the founding partner of the Sustineri. And she also runs the real estate sustainability of the DWS. If I'm not mistaken, it's the Correct. Real estate arm of the Deutsche Bank, right?
It's asset management arm of Deutsche Bank that IPO'd, but it's still really a Deutsche Bank asset management arm. So a German asset manager. And we cover all kinds of investments, but I specialize in real assets, so that's what I cover.
And if I'm not mistaken, you're based in London, right?
I'm based in London.
Okay. And we have Alexandre, a Frenchman, also based in London, right?
Yes.
He is the founder of the Climate Finance 2050 and has more than 30 years experience in structuring investment.
You can tell with my white hair, yes.
I beg your pardon?
As you can tell with my white hair.
No, I wouldn't say that. I wouldn't say that. But as I said, structuring investment, especially in the energy infrastructure and climate resilient. So this is what we're trying to address during this panel, is how we can deal with assets and how we can actually build and finance them within the region, and how they can hold the value during the climate change. Also, we'll have a presentation, and we have really great guys supporting us with technical issues here, so thank you very much, guys. We'll not read the numbers, they will just support the discussion. So let's start with numbers, actually. How big is the problem, and is it getting better or worse when we consider the data on board? Alexandre, would you share your thoughts with us?
Yes, thank you, Vladimir, and indeed thank you for having me. Well, I think all of these numbers are very significant. I mean, a 9% GDP loss that's expected by 2050 in the region is significant. The number globally, if you take World Bank studies, for example, is about 15% of global GDP that's expected to be lost in case that global warming reaches 2 degrees by 2050, and it actually becomes 30% by the end of this century on a 3-degree trajectory, and we're at about 2.8 at the moment, so we're not far off. So 10% in the region, 15% globally, 30% by the end of the century. This is not a minor set of figures. This is actually a systemic risk. And the question is, what do you do about it? How do you reduce these numbers? How do you reduce their impacts on the real economy?
Mm-hmm. Indeed, and of course, as a sustainability person, I flag that climate change is happening. We have been talking about transition a lot, and it's not, I'm not saying we should not be investing in green energy. Of course we should, not only for climate change mitigation, but also for energy security being the topic. But we have to recognize that the ambitions that we had to achieve, to stick to 1.5 degrees are unlikely to be actually achieved. We are already seeing increased catastrophes. This region, you can see 80% of insurance is actually for Europe. In this region, their level of insurance is far, far less, if not zero. So the gap between ability of the region to consume, if you like, that kind of risk, or manage that kind of risk, and the level of risk is widening, actually. The risk is higher, and the capabilities of the region through various crises, you know, you had floods in 2014, you have now the energy crisis, you had pandemic, so whatever cache of resilience that we had in terms of financial resilience to these shocks is depleted. So we have serious problems on our hands that we need to resolve. I don't want to lower the mood in the room too much, but it is a fact. So, you know, it's a risk, but it also can be an opportunity.
Mm-hmm. And maybe just to add to this, and your point about the mood, I would put to the audience that this is the most exciting investment opportunities that there is for the next 20 years. In some ways, it's more exciting than tech and AI. Now, you know, you'll tell me at the end of this debate whether I'm right or wrong, but this is how this should be positioned. And one thing to add is a lot of the discussion about climate finance in the past 10, 15 years have, and rightly so, been around mitigation. There's been progress. There needs to be much more progress. And climate adaptation and resilience, and particularly the financing aspects of that, has been left to the side room to, you know, people from government organizations that are perhaps not directly involved in developing new projects. And it's been quite opaque and certainly not attractive to the private sector. And I'm sure we'll come back to that theme in a minute. But actually, when you think about the sequencing, what the level of emissions that have taken place up to now mean that the impact of climate change is locked in for the next 20 years at least. Whatever we do on mitigation, even if all the energy going forward was green, even if we achieve net zero not by 2050 but by 2027, we'll still have a level of catastrophic impact of climate change that is there. And so the notion that adaptation comes second is, in some ways, is false. It needs to be addressed now because we're facing the consequences. To talk about mitigation is going to impact, and how fast we go on the trajectory to net zero is going to impact the world in the second half of this century. But what's happening in the next 20 years is already locked in, sadly.
Mm-hmm. Interesting point. But let's see some additional numbers. And we can see that the gap is actually wide and getting wider. And could you tell us where is the exposure most concentrated, and is it evenly distributed across the region? And how would you actually comment the statistics?
Me to do that?
Yeah, it's you again.
A Frenchman from London.
Yeah.
Look, I think it's slightly diverse, as the numbers show, with Serbia being the most exposed. But I think it's obviously a function of geography, as well as the infrastructure and real asset stock that exists in the various economies. What this graph doesn't show is the trend, and I'm sure that it's different country by country. The other point I'd make is that I think it's a regional issue that ought to be addressed through regional cooperation. And so, you know, every country is impacted at different levels, but actually it's a regional and common issue.
Mm-hmm. And one thing that I would add, so this is the World Bank's report that looks at floods, droughts, and heat stress. So you need to add to that wildfires, you know, Montenegro being one country that will and has suffered. From that, you have more insidious risks like extreme heat, you know, or compounding, of course, the wildfire risk. Not necessarily a climate risk, but earthquakes, both in Albania and in this region, are also compounding further, landslide and so on. So the numbers here are actually not the full picture. There's a lot more. and obviously very significant numbers that we need to deal with.
Mhm. If I may add something as a civil engineer, and I see some fellow real estate experts also here in the audience. Montenegro is a very sensitive zone when it comes to the earthquake risk, and the construction codes are 100% stronger for Montenegro when it comes to the amount of steel in the reinforced concrete. You need just to double the amount that you can hold the impact of the earthquake. But enough technical details for this moment. Let's move on, and we realize that of course it's the exposure is real and it's not unevenly distributed. So it's not just it's more than an environmental problem, and I would say it's the financial stability risk. And Aleksandr, it's again you who I guess can walk us through that.
Sure. I mean, this reflects the reference to systemic risk that I mentioned a few minutes ago. With these climate exposure of real assets, you're going to have damages, you're going to have interruptions of services, you're going to have losses of values. The more events occur, the less the insurance coverage is going to be available, the more expensive it's going to be, and that's a natural phenomenon, market-driven phenomenon in an insurance market. There's nothing wrong about that in theory. You end up with uninsurable assets in certain geographies for certain hazards, as the insurers call climate risks. That then compounds the problem, because an uninsurable asset typically becomes very difficult to finance, or credit tightens, as is shown on the slides. So the cost of capital increases, it impacts the value of the asset. So it is a sort of a downward spiral, if you wish, that creates value destruction, both financially, but obviously literally as well, in terms of the ability of the assets to operate the way they should be. So that's what we're facing, and that's what we need to change as a sort of vicious loop.
Indeed, and I work a lot with pension funds in my other life, and the talk always, when it came to physical risk, they didn't talk about climate change. They said physical risk, okay, we have some catastrophes, it's all insured, job done. All of a sudden, now they want to talk about, well, how you're actually adapting your assets, how you're making them more resilient, what is a resilient asset, in your opinion, how you're going through all of that, exactly because insurance is probably not going to cover anymore. There are even parts of the world where insurance companies came out. The countries have to step in, other systems have to step in, but that is in more affluent countries. And in this part of the world, what do we do? So it is something, and we talked about it as a risk. Now we can maybe talk about how do we actually finance resilience and how resilience can actually pay. I think that's the business case that we need to make, in essence, in order to attract various forms of capital to resolve the issue. Right.
Just to add to that, Sasha, there's a very recent report by the insurance Swiss Re, and I'll read from their natural catastrophe report in 2025. I quote, "Hazard intensification and vulnerability effects amplified by asset expansion into high-risk areas are creating loss trends above economic growth, a challenge for economies and the insurance industry as a whole." What this is basically saying is, as the magnitude of damages increase, the insurance industry cannot follow. And so you have an increasing gap, which leads to the previous loop. And as you said, it needs to be reversed, and therefore any investments in resilience need to be financed.
Mm-hmm. So you made an exactly great point. to move forward, to say, to explore more what could be done or should be done, that we use resilience not only as a cost, but to use it to actually generate financial value. But what does it mean in practice? How do we actually achieve that? Sasha, would you eventually start?
Well, let's start, how we, again, just to continue a little bit on how in pure institutional way, how risk, this climate risk has been looked at. It was purely defensive, and it was, pushed off to insurance. What we have to do now is assess the entire portfolios to exposure. We use one of the many tools, you have Munich Re, you have Swiss Re, there are many providers that will look at exposure, right? What is the likelihood of a certain event happening? The thunderstorm when the weather forecast was sunny weather, but okay. And look at what is the severity of that event, right? So that is the exposure. Then you need to look at sensitivity of your asset. Not every asset is equally sensitive to the same risk. So your, if you have a logistics asset, okay, well, if you have a drought, it's not going to be hugely impacted by that, or a road. But if you have an agricultural asset, it's a completely different story, right? So not every risk is going to impact every asset the same. So we have to then apply this sensitivity factor across the entire portfolio, and then we have to look at how each and every one of them is adapted, and is it adapted, and is that adaptation sufficient? And we are seeing now from ECB penalizing banks, Central Bank of Montenegro has also put in regulation last year saying you have to assess your not only transitional but also physical risk to climate change in your portfolios. That's what you need to do. You need to look at exposure, you need to look at sensitivity and adaptation and see whether your asset is resilient, because there is no place on the planet without risk. What an asset manager needs to do and a bank needs to assess the level of that risk. Is it in line with the risk appetite that's set? And then invest or not invest, right? So that, simple risk management. Now, what this risk also then, it's an opportunity opening for investment. And maybe I'll pass on to Alex to talk about how great an investment resilience can be.
Indeed. Let me start by actually turning things around and acknowledging that there is a strong case against investing in adaptation and resilience. And the case is that you're investing capital today to reduce the vulnerability of an asset which is quantified by essentially lower future losses to that asset, either direct damages or indirect interruption of services and loss of revenues or increased operating costs, a combination of all of that. Now, the thing to bear in mind is that the timing of these avoided losses is very uncertain. There are climate scenarios, obviously, but they don't tell you there's going to be an earthquake or a tsunami, though these are not directly linked to climate, or a windstorm in Montenegro in 23 months and 2 days. They don't say that. They say in the next, well, actually they say next year there's a 1 in 100 chance, so 1 in 100 chance, so 1% chance that this might happen, or there's a sort of 5% chance that this may happen. So you may think that's low as a probability, but actually in aggregate that becomes quite significant. So the timing is very uncertain. The quantum of your benefits is also highly uncertain, namely the reduction of the expected losses is very difficult to quantify. It's a factor of probability distributions, of the probability of occurrence of an event and probability of the severity of that event, right? So again, all kinds of very intelligent people working on this, developing climate data, but what the data tells you is, here is a level of uncertainty, now go and work with it. right? So that's a case against investing, and that's the overwhelming case, which is why private investors have not really begun to look into this. Now, there's obviously a strong case for investing in resilience. Now, this slide shows here quite an attractive figure of 27%. Now, I'd love to be able to showcase a portfolio of investment opportunities to investors demonstrating these numbers. Unfortunately, it doesn't exist. This is a macro-level view. I think it's a number that came from the World Resources Institute that combines the avoided losses that I referred earlier to with the socio-economic benefits of investing incrementally in assets. So there's more capital going into the economy, so there's more jobs, there's more activity from construction companies and so on. So that has a direct, indirect benefits. And then thirdly, the so-called ecosystems benefit, which are even more difficult to quantify. But this is the envelope that is available, which actually is an attractive and interesting number. But now we need to disaggregate it to make this, to turn this into an investable story. Now, let me again mention one study from, this comes from a French business school, and they have a so-called called EDEC, and they have an Infrastructure and Private Asset Research Institute. They published a report 2 years ago called "Why Are Infrastructure Investors Aware of the Risk of Climate Change but Failing to Measure It?" So I'll give you 3 statistics. One is 97% of investors polled believe that physical climate risk is significant for their assets. 97%. So there's unanimity to say it's a problem. 66% of the respondents had not conducted any evaluation of physical climate risks on their assets. So 97 say we have a problem, but actually only less than a third of these say we've done something about it. This is what I call the ostrich syndrome. Most investors have their heads buried in the sand when it comes to understanding the impact of physical climate risks on the value of their assets. They're saying, well, we don't know what to do with it. Tell us. Okay, so we're going to tell you. But only 16% believe that there is adequate understanding of how these risks will affect their assets. So there is an issue about tool, data, and methodology to turn what everyone is now, or more and more people are realizing is an issue, arguably mid to long-term issue, into short-term decision-making.
Mm-hmm. Interesting. However, let's stay with 27% as a very, very huge number. Actually, benefits that materialize even without a disaster. So, where does the capital actually come from to make those kind of investments?
The next slide.
That's the next slide.
You have actually market moving into this. So, Climate Investor 2 is a fund, it's an institutional fund, over $1 billion. So there is actually a way to structure the investment in such a way that by layers, and we can maybe explain that later on, but first layer will take more risk and less return. So you have to really do a blended finance model in order to finance something like this. But there are quite a lot of investment vehicles now being launched, already in place, that are successfully raising capital, raising institutional pension fund capital, which is the most risk-averse out there, to invest in these projects. We heard in morning's plenary sessions talk about ecosystem, right, about vision, about how you sell the entire infrastructure of the country rather than just one asset. If my asset is resilient, but all the roads around are flooded, it still doesn't work. right? I have invested in this lovely hotel, but people can't get to it. So it's several layers on investors, several layers of institutions need to come together in order to make this work. Now, the study that we did, 27% or 28%, whatever it was, does multiply avoided losses, lower insurance rates, and certain things that are not valued, natural capital, for example, and social impact that are not generally valued properly. Even physical risk damage is not valued properly, let alone the natural capital and social capital. So it's an attempt of doing that. And then, as Alex said, it's not necessarily a fully realized number, but giving a scale of what can be achieved as both the financial, economic benefit, but also environmental and social benefit.
Alex, could you walk us through the financial modeling?
Well, I'll try, obviously. Look, I think you're absolutely right. Whether that figure of 30 billion needed for the next 30 years, I think it's probably for the region, right? Yeah. And obviously it's much more than that globally. There is an adaptation and resilience financing gap in the order of $250 to $300 billion a year globally. So, we're talking large numbers, but equally not completely out of sync with the capital that's available. I'll remind you that the aggregate market capitalization is more than $100 trillion, that there is the bond market is also in that order of magnitude. So capital is available in the economy. It's owned by asset owners, right? Institutional investors, pension funds, insurance companies, endowments, national sovereign wealth funds, and all that. So these are the entities that we need to convince so that they allocate capital to the asset managers, the various funds, who then deploy that same capital into assets, right? And in doing so, they need to work hand in hand with governments and with multilateral and development finance institutions. But I think three things need to happen for that capital to flow through to where the assets are. First of all, we need to be able to quantify the benefits of adaptation and resilience. Now, we talked about the trickle dividends here, but it's quantifying the returns that will come and being able to map them out in terms of the lifetime of these assets. Second, there needs to be a mechanism to allocate these benefits. Some of these are directly linked to the assets. It's the reduction in interruption of services, so that leads to incremental cash flows. That's great. Some of them are indirect benefits, as you mentioned, Sasha, linked to infrastructure systems, access to the assets, and then ecosystem benefits. The investor in a single asset can't, on its own, get these benefits. There needs to be a public sector mechanism or a government mechanism that allocates some of them if the capital is coming from the private sector. So that is through public-private partnerships, and this is where governments have a very significant role to play. The third thing that needs to happen is to monetize these benefits. It's one thing to quantify them, it's one thing to say, well, we're going to allocate between public and private sector in this or that way, but actually, unless you turn this into cash or tax credits or reduction in insurance premiums, they're not going to be monetized, and therefore they're not going to really meet a private investor requirement. So, there are ways to do this. There are a lot of work that's being done by different organizations around the world, and so I think significant progress is being made. You asked Vladimir about capital and how it's stacked up, which is what this slide shows. And this refers to your point about blended finance, Sasha. So we've made the point that the capital mostly comes from the private sector because governments are constrained. That level is what it is, and actually government funding comes from taxation. So we're not suggesting that there should be that the taxpayers should pay for all this necessarily. But what do private capital providers need? Now, I'll give you a few elements in no particular order, but I think there needs to be, firstly, I said no order, but I say firstly now, clarity on what the resilience standards should be. We're talking about a path. We're talking about the degradation of climate over the next few decades, and so there needs to be a set of standards from the construction industry, for every sectors of the real asset, including infrastructure, that says, well, we would expect your assets to be able to withstand the impact, physical impact of this event, knowing that this event has a 1 in 50 chance of occurring next year, right? So governments need to set these standards together with industry participants. There needs to be, as we discussed, identification of the return components. So, how is that being worked out? I think there should be some significant de-risking. And the de-risking can take many forms. It takes the form of guarantees for certain specific risks, including currency or political risks. Blended finance is, in some ways, a de-risking mechanism. There could be revenue support mechanisms, the same way that you have feed-in tariffs for renewable energy projects. Why not conceive of some sort of, ecosystem payment service which would be akin to some sort of revenue support mechanism? All this then needs to translate into price signals. And so the price signals, again, take many forms. It could be a reduction in insurance premiums. It could be an improvement in credit quality, reduction in margins, or increase in debt capacity. But for that to happen, and I'm sure we can discuss that with our colleague from EBRD, but the lenders themselves need to realize that the credit risk has been reduced. So that there needs to be metrics to achieve that. There can be reduction in equity return expectations. So this is there's a methodology called the Physical Climate Risk Appraisal methodology that a group of institutional investors in London put together. And they put all of this together in what they call the value enhancement loop. So this is talking about the climate resilience enhancement loop, and so aggregating all these various components to change the vicious circle that we talked about at the beginning of this conversation into a positive aspect. And then the last thing to mention from a private sector point of view, I think there needs to be project aggregation. You're not going to get the sovereign wealth funds of Abu Dhabi invest in a single infrastructure project in Montenegro to improve its resilience. What you can have is them invest in a vehicle that itself deploys capital to a portfolio of investments into climate resilience of different projects.
Exactly, and that's what I said again in the morning sessions. Is this a $500 million or $500 million project, right? So pension funds are not going to come in for a small little project. It needs to be a package thing. Another thing, I think Richard Attias was talking about impact. So impact metrics, of course, EU taxonomy is mentioned there on the slide. So on top of all of these metrics that are to do with finance, you do need to use the overused acronym ESG metrics. So they will still want to see what is the environmental and social return on their investment, and it's still a big factor, even regardless of all the backlash to ESG. Institutional investors still do care about it, especially impact investment funds, which would be potentially those that would enter the commercial line on this graph.
And I think we're almost ready for the second part, aren't we, Amina?
Yes.
Okay, good. So before we switch, just the final takeaway. What is that one thing that everybody here should remember? One sentence each, please.
Well, the resilience of infrastructure, we are waiting for a speaker, and maybe with a better infrastructure, they would be here sooner.
Well, I would be very ambitious. I would say put the Balkans on the resilient finance map, right? Because this is a game that's there to be grabbed. And that can take different forms. I'll give you two ideas. One is to create a regional insurance pool, same way that exists in the Caribbean or in Southeast Asia, where different countries pool their funding for insurance that cover climate risks across the region. Second one is consider the creation of a regional resilience finance facility, which could be managed by a regional entity and aggregates investments into project resilience.
Thank you so much. One big applause.
And the storm has stopped.
Okay. Continuing on this discussion, we'll zoom out a bit and we'll discuss the infrastructure agenda for the Adria region. I'm glad to have a man in the room with us who truly speaks to the future of Montenegro, to the future of the construction and the way the country is built. Also a man who is speaking truly to the resilience. Despite the traffic jam and the rain, he managed to come in time for his panel and brought us sun. So applause for the Minister, Filip Radulović, Minister of Maritime Affairs and Transport, Government of Montenegro. Please join the panel. One more. And of course, we are honored to be joined by a true friend of the Adria Future Summit that has been with us for years, Mr. Ramon Zakaria. He's the head of Montenegro for EBRD. Round of applause. Thank you.
Come sit with me.
So, welcome everybody to the second part of the session. I'm very happy to have you all here. Thanks for making it to Tivat despite all the weather conditions. And we're talking about some risks and some eventual things that can happen. And let's start with this. In the whole region, but since I live in Vienna, in Austria, it's the same story there. We're all having great ambitions when it comes to planning infrastructure, but we struggle when it comes to executing those projects. As civil engineer, I can assure we're never late, almost, but we are doing our best, but we have, of course, some financial risks. And there is a big question of the capital, of the private capital, how it can bring some benefits to be invested again. And the question is actually, what can we do to unlock those opportunities and those investment possibilities, and who in the room can help? That's why I'm very happy to have distinguished guest with me here. And dear Minister, if you could share with us, and we know that Montenegro has several very big infrastructure projects. We're talking about the highways, we're talking about ports, about airports, etc. And what would be your investment priorities for the next 3 years, and where do you see the biggest opportunity for the international contractors and financial institutions in Montenegro, but also in the region? The mic should be on.
It's on?
Yeah.
Okay, great. Thanks, first of all, for the invitation to the panel. It's great to be back here again. It's an exciting time to be a part of Montenegro's infrastructure system, definitely. I'll say that probably the biggest opportunity and the most important project right now that we're working on is the continuation of the Barbuljara Highway. The highway that is going to connect, once it's completed, not only the coast of Montenegro with Serbia, but the port of Bar with the hinterland. And I think that's a really, really big key for us to unlock going forward. It's something that hasn't been a focus of Montenegrin governments in the past, and I think it's been a huge missed opportunity. But I'll kind of focus on a little bit more of the positives, what we're going to do. Finishing the Barbuljara Highway, the second portion is set to kick off next month. from Montenegro to Andrivica. Our colleagues from the EBRD know that very well. They've given us a very low interest loan in the amount of 200 million euros. We got a 150 million euro grant for the European Commission about a year and a half ago for this project, which is just another confirmation that we're going to be the next European Union member. In any case, it's really key that we connect this highway infrastructure project quickly with Serbia. Not only is it important to connect with Serbia, but by connecting with Serbia, we're going to be connecting to the rest of the corridors that we have in Central Europe. So it'll allow for easier flow of goods, people, transport in and out of Montenegro. We have Adriatic-Ionian corridor that we're working on as well. That's another huge project for us. It's one that's going to really lighten the load and lighten the burden that we see during the touristical season each and every year on the seaside. The idea is that we're going to connect Albania up through Bosnia potentially, hopefully, if not directly with Croatia. So the plan is that we're going to have two intersecting corridors, one going, I'd like to say north-south, east-west, but it's not, our geography doesn't look exactly like that, but more or less north-south, east-west. And by having that, we're going to really unlock Montenegro's economic potential. We have a case where we have, for instance, two capital cities, Sarajevo and Podgorica, who aren't distance-wise that far apart. But if you look at the infrastructure, we're a world away. And whenever you're able to unlock connecting two cities and have them being the capitals, it's really a huge multiplier effect to the whole project. So I think there's going to be huge opportunities for financing from various IFIs to banking. It's a lot of hundreds of kilometers of roads that we're planning to build in the next 3 to 5 years, kick off at least. So there's a huge opportunity for IFIs and banks to get involved there. And like I mentioned earlier, unlocking the potential of the port of the bar is absolutely key for us here. It was split about 12 years ago into two different entities. I think most citizens see that now that there was a miss. We have other ports in the region, Koper in Slovenia, Rijeka in Croatia, that are packed up to the brim in terms of capacity. They don't have anywhere else to go. And instead of having that rerouted to the port of Bar, we're missing out on a lot of that trade. We all know in normal times, about 80% of the trade between Asia and Europe goes through the Suez Canal, and a large portion, a portion of that can be directed through the Balkan hinterland. And we're not able to right now, the Port of Bar, utilize the geographic disposition that we have, the natural predisposition to be a very successful port. So that's something that we're focusing on intently during this mandate in the coming future. Other modes of transportation that I think are worth noting, just as a couple of years ago, Montenegro didn't have any passenger ship lanes connecting to any of our neighboring countries. This year we're going to have two, connecting Budva and Dubrovnik, connecting Kotor and Dubrovnik. So I think we're moving in the right direction as it pertains to infrastructure. There's huge potential. I don't want to miss out on mentioning rail. I've been saying for the past 2.5 years, you can't have a strong port without a strong rail system. And the other way around, you can't have a strong rail system without a strong port. So again, in the coming 2 to 3 years, I expect about a $300 million infusion in terms of restructuring and doing a whole reconstruction of the rail from Bar all the way up north. It's going to be a huge impact, and we're really looking forward to that. We think that's kind of the final piece of the pie. We started on the roads, we're working on the Maritime, and then we're able to finish off with rail. So a lot of big projects coming our way. It's a really fascinating time to be a part of Montenegro's infrastructure development. It's really, I think, what it boils down to is, do you have political will or not? Of course, money is always a challenge, but where there's a will, there's a way. There's various instruments and levers available to countries to kind of figure out the pieces of the puzzle and how to best fit them. So the political will is absolutely there. We're working really hard. One thing I will say is we've pretty much finished up almost on all the road planning in the country, the conceptual design, the final designs, the preliminary designs, and those are all crucial phases to each roadblock, to each of the roads being built before they get kicked off. We can't even release a tender without having all three of those stages fully finalized. And when we started our mandate about 2.5 years ago, we didn't have any designs at all. Just maybe one little portion for Mateševo and Radulović, which is a good start. But considering we have, I don't know, maybe let's say roughly around 20 portions of highways, fast roads that we're building, that wasn't enough. So we spent the first 2.5 years of this mandate really kicking off, doing all kinds of preliminary, conceptual, and final designs in preparation for financing. So we're really on the cusp of that, as evidenced by what I mentioned that we're starting the roadworks on Mateševo and Adria just in a month. I expect the Budva bypass, which is going to be a huge deal for Budva and for Boka Kotorska as well. By the end of the year, we'll have kicked off works on that as well. We had 3 companies compete on the tender. In this case, they're all Chinese companies, which is fine since it was a public tender. And we expect in the first half of this year that maybe by end of May, we'll have a company named to kick off the works. And in the second half of this year, we'll be able to start on Budva bypass. And that's a really big project. I think in about a year, we'll be able to kick off Budva bypass. And in this way, we will have, when they're all completed, really tackled the key pinch points all across Montenegro's coast and inland. So everything is moving in a really good direction. I'm really enthusiastic about it. It took the first couple of years, like I mentioned, to get all the prep work done, but now it's really going to be a thing of picking and choosing where the capital is going to go, how are we going to finance, and that's the fun part of it. We did all the heavy groundwork now, and now it's going to be the planning and getting the work kicked off.
Thank you so much, and that was just a perfect transition to Ramon to speak about the money, about the finance in the name of the EBRD. And actually, the last year was the best one ever in Montenegro. I have here noted that you've been involved in 18 projects, right, in Montenegro, and I wonder what should happen that this is not just something that happened, but to become a baseline.
Thank you, and good afternoon, good evening all. So, Minister, we have been, I mean, this is already not the baseline, because for these coming years, we are expecting to have similar levels of investments. There are a number of projects that are under preparation, even for this year, including, for example, what the Minister mentioned, the railway infrastructure, Golubovci Bar, so the connect the port of Bar and to Podgorica, which is a co-financed between EBRD and the EIB, and there is a large grant of 112 million. And you know, the trajectory is there. There is huge infrastructure needs in Montenegro, both on transport, environmental infrastructure, and energy infrastructure. Because again, if you want to have renewables, you need to invest into the grid. Otherwise, you will not be able to exploit the renewable energy developments that occur in the country. And so that's precisely our focus. Our focus, we are a private sector focused institution, but we believe that for Montenegro, the priority is to improve infrastructure that would enable the private sector, so that, you know, the minister, once, you know, the Trivatias is completed, which, by the way, we financed as EBRD, we will have, you know, greater connectivity between in the coastal area in a very highly traffic-rated situation.
Okay, thank you very much. And Alexandre, you work at the intersection of the climate strategy and infrastructure finance. So, what do we need in the Adria region to demonstrate in terms of policy, frameworks, or deal structures before private climate finance actually moves from exploratory to deployment?
Well, I think it is happening from what I hear. And the Minister mentioned some very important points around procurement frameworks, around bankable regulatory regimes, and there's a whole range of types of involvement of private sources of capital around concession contracts, public-private partnerships that can take different forms. I think that's already being implemented. So the capital is flowing. I think having a set of climate resilience standards, as we discussed previously, it would be also a positive. And I guess there's an issue around, or perhaps a question more from my side, around project aggregation, because I think there's a significant difference between relatively small renewable energy projects, for example, versus very large highway or port projects, which require hundreds of millions. And so how do you bridge that gap, and which type of investors do you look for to fund these different types of projects?
Mm-hmm. And Sasha, from your point of view, where do you see the most significant opportunity, whether it's in real estate or in the built environment in the region right now? And what do you think it's holding capital back from eventually moving faster?
It will depend what capital we talk about. So some more risk-averse capital is still staying away. Again, those pension funds that Stephanie, I think, mentioned in the morning session. Again, pension funds are the most risk-averse, so they will want to have certain systems in place before they enter a region. And of course, between them, there are differences, right? But the more private capital, more entrepreneurial capital is already all over the region. So if you want to attract pension funds, then I would say alignment with EU norms. And EBRD and EIFC already have these norms that are required, for real estate edge and so on, so certifications and so on, that will guarantee in a way that de-risking the asset from an environmental point of view. It's energy efficient, right, and it's climate resilient, physically resilient. So they will be more willing to lend to that, and that goes for pension funds. Especially European pension funds, they will look at is the asset aligned with EU taxonomy, is it aligned with EBRD, EPBD, sorry, Energy Performance of Buildings Directive, is it in line with European standards, and then they're able more easily to invest. And that goes for infrastructure as well. So especially for Montenegro, as it's entering the European Union, hopefully being a 28th country in 2028, right, all of that, already aligning with those standards would make sense. Even though they're not formally applicable, they're practically applicable because these projects, if you're planning something now, 2028 is in 2 years, you want to attract this capital, these things take time, you should be aligned with European regulations right now.
Mm-hmm. And talking about European regulations and investments, Ramon, EBRD has been heavily investing in Montenegro since 2006, so for the last 20 years. And my question would be, while executing those projects, have you also been building up the institutions and the delivery capacities, or you've been starting from the scratch? And how would you assess it now? Are we in the region getting better? I won't say or worst. I'll stay with a very positive definition. And how do you think we're dealing with when it comes to delivering very complex infrastructure projects?
Thank you. Well, I think the institutional capacity is critical. You need to have competent counterparts or continuity in the counterparts so that they can learn while implementing projects, and then the second project will be faster. We have seen an improvement. We have seen an improvement in recent years, and it's important to maintain it and to basically professionalize all the SOEs in terms of enhance the corporate governance of state-owned enterprises, ensure that basically at all levels the changes in political changes does not affect institutional changes. This is, I think, the critical point to ensure continuity and to ensure that implementation capacity is retained. I mean, obviously, we have been building capacity. We usually fund also consultants that these are called project implementation units that supports the government counterparts in implementing projects. And in a way, this is building their capacity. We have trainings. We have conducted road safety trainings in Montenegro, for example, with the Ministry of Transport in the past. We have been also supporting on the policy front to deliver and draft new regulation, new policies. So there are a number of avenues in which development bank like EBRD has been engaging together with donors such as the EU and other bilateral donors in supporting government institutions. What is key is to retain talent and to basically ensure that, that this talent remains in the institution so that in the future this improvement, which I have to say is visible in terms also of the number of projects that are being implemented, is remaining.
Mm-hmm. And Mr. Minister, where do you see, I won't say a challenge, or maybe let's call it a bottleneck, or even opportunity, when we're talking about the stakeholders or the institutions involved within the execution of the big infrastructure projects, whether it's the procurement framework, the technical supervision, the project management, or the institutional design. What do you think should be improved regionally that we can execute those projects faster and better?
I think people have to be a lot more mobile, from the ministers to various directors, all down the food chain, if you will. The old school method is you sit at your desk in your conference room, and then you give an order, and then you tell the person below you, your deputy, and he translates that down. And by the time it gets down to the person that needs to hear it, it's already passed a day or so, or a couple of days. I don't like that method. I like to be on the ground, and I think that's the best way to get things moving. People here like to take a little bit slowly, send an email, wait for the mail to come in. If you want to get things done quickly, if you want to get it done fast, you gotta be mobile, and you gotta get on the ground. That might mean some time going and taking initiative and going to some other stakeholder that's on the other side of the country, if that's what it takes to get done. I always like when the people beneath me, deputies and whatnot, take initiative. You don't always have to wait for ministers to talk, or directors, or I don't know, načelnik to načelnik. You don't have to wait for the hierarchy. In fact, the hierarchy is almost always slows things down. People need to take initiative. I see on Tivatjas, for instance, there were problems, tons of delays, everyone knows that. We had 3 different entities that needed to work together, the construction companies, the regional water company as well. And I remember at one point I was saying, you guys get out of your chairs, get up out of your desk, and go meet each other and talk. and get it done. That's the only way. If you're going to get things done or think you're going to get things done just by sending emails, you're not going to get it done. And I think it's a little bit of a mentality shift when you see, when you lay out your priorities, you got to go tackle them. You can't wait for things to come and solve themselves. They won't. And that can play out across the board on a regional level as well. I had an initiative. I met last year my colleague in Croatia. I sent an invitation. And I said, hey, I'd like to be and chat about these certain topics. And he said, of course. And we set a date, and we met up, and we talked about several potential opportunities for working together. And a lot of those were very fruitful. And again, if I had waited for someone to send me an email, maybe it wouldn't have come. If I had thought, oh, you know, someone should send me, I'm too important or something like that, things don't get done. And I think that's the attitude people have to have here. Get out of the office, get out of the chair, go down and meet the people that are doing the actual work and see things in person. If someone tells you things are, en route, things are getting done, go and verify, trust but verify. And I think that's a really good approach to making sure things get done for various projects. If we're talking any kind of infrastructure project, really, I think that's the key going forward. That's how I like to take control of things, and I think it's been relatively successful so far. So I think that's a good way going forward.
Okay, I as a civil engineer who has been working on some very complex infrastructure projects, I need to say that all the claims and all the disputes were caused by people who didn't want to speak with each other, but sending 5 pages emails just to be on the safe side and playing ping pong, and then going to the court, and you know how it can all end up. So exactly. Can't agree more. Absolutely. We're running out of the time. I know that Amina is just like staying there. So this is like the moment where, if you may allow me, I would just start wrapping this up. I know that we can speak for hours. So what would be the one takeaway for all of us here? Where do we see the region, and where do we see the infrastructure in Montenegro and real estate? And what's one takeaway for us here in the room? If I may start with ladies first.
And thank you for that, because the last person always draws the shortest straw, because the topics get drained. So thank you for that. But I'll stick with my corner of the woods. So I would say, for all of these huge investments that Montenegro and the region are making, taking care that they are indeed also resilient to not only current events, but also more severe and frequent various climate risks, is clearly a smart investment. They need to last for decades, and that should simply be part of thinking from day one.
Thank you. Ramon, would you be the next, please?
I cannot agree more with Aleksandra. This is embedded in our financing. I would also add environmental and social to really make sure, when designing new infrastructure, to take this into account. In fact, the highway actually, I will just have 10 seconds more. The highway actually, we diverted it, because initially it was crossing a town, a village, and it was splitting it in two. And we had to redesign it together. I mean, Monteput had to redesign it in order for us to proceed, because it was going to cause significant social harm. And this, again, is the government will to basically adhere to these standards is very important. And we all tagged along, and we managed to successfully deliver within a limited time frame.
Thank you so much. Alexandre?
I think we all agree, and I would add to this by making a suggestion, which is to consider registering some of these projects to international sustainability labels. And I'm thinking here of the Blue Dot Network, which is managed by the OECD, as well as the Fast Infra label, which is Secretariat is in Switzerland. This provides international visibility, and it ticks all the boxes that you just mentioned, and potentially helps attract more capital and reduce the cost of that capital.
Thanks so much, and last but not least, Mr.
I'll give a little different ending. I've been thinking a lot lately, as my job can be quite painful, and more painful maybe than people realize. And what I'd like to say is, I think when we look back in 10 to 15 years from now, at this point in Montenegro's history, we're going to say, wow, that was a really amazing time. On the cusp of entering the EU, on the cusp of a windfall of major infrastructure projects. And as painful as it can be in the moment, and we say, oh, I wish things were going faster. I think they were going smoother. I wish things were cheaper. I wish things were better. Nothing is going to, no one has a magic wand. The process is part of it. And as cheesy as it sounds, really going through this process and this transition phase that Montenegro is going through is absolutely necessary. And we're going to see the dividends being paid off for generations to come. And I'm completely, even when I'm really frustrated with work sometimes, to say, I know in 20 years I'm going to look back and be extremely thankful that I was in Montenegro at this time, at this turning point in the country's history. So maybe, maybe a little bit optimistic message that it can be challenging living in the now, but it's worth it and it'll be better, and we're going to all be really proud of it pretty soon.
Great. Thank you so much.